Hi, Tim Biggam back again this week for Traders Exclusive, and a somewhat mundane week so far. It looked like the market was going to try to make a significant move to the downside. That was staunch today. S&P's last I looked up about 5 points, so we're really seeing the effects of kind of fairly rich stock valuations versus cheap money. Again, you have to respect the move the market makes, but acknowledge the fact that stocks are at historically extreme valuations, albeit versus where interest rates are at. Hard to compare because interest rates really have never been here before. So I think that'll be the trade-off going forward here. Earnings season somewhat done with, so earnings came out lackluster to say the least. Revenues certainly were less than stellar, although stock buybacks are the thing that's really fueling this market going forward, and probably will be as companies still look to buy back more stock, issuing debt to do so at these low interest rates. So kind of changing the balance sheet, so those pristine balance sheets that we saw with lower levels of debt probably will start to creep up as well, and if interest rates rise, that'll put an end to the stock buyback game. So be interested to see going forward what happens. I still favor out of the money call spreads, selling those as kind of a trade structure across the board. I'm guardedly non-bullish, I guess is the best way to say it. I think we'll be just mired in sort of a yin and yang sort of market going forward here. So buying puts, even though the VIX has come down, it's still, hovering about that, a 12 level, which is, when it gets really cheap. So I still like selling out of the money call spreads, using the SPY to do that, trading about one standard deviation out 3 weeks in time. That gives me about a 4% upside cushion here on a 5-point spread, capturing about 65 cents. So I like doing that as kind of a trade structure on that and some selected names going forward. Big event coming up, obviously, is March 9th. Apple, all eyes on that. Apple finally showing a little weakness here. And if you take Apple out of the earnings picture from last quarter, we really don't look too good overall on the S&P 500. So just something to be aware of. And I mentioned kind of last show that I was on, I'm looking to be more opportunistic rather than tactical in this market. So using option scanning tools, especially. I'm over at RB Trader using their kind of option scans and finding some really decent buy right opportunities. What I look for is what I call volume and volatility. So I look for big spikes in implied volatility, big spikes in volume on stocks that are trading higher on the day. So a big call buyer coming in, if you will, overpaying for those calls. I kind of lean in the direction of the paper. I'll buy the underlying stock, sell those expensive calls, wait for things to kind of realign, and take that off and move forward. So if anyone wants some information on that or some of the kind of free research that we're putting out on that, you can email marketing@rb-trader.com. Ask for Mark. He'll be happy to set you up with that. So until next week, this is Tim Biggam, and as always, and especially in this kind of quiet market environment, keep those position sizes in place and those stops going. Take care.